Hello, can you hear me?
Yeah.
Okay, so now let's start. Okay, so bearish breakout, I've told you about this pre-breakout build-up in the last video, right? Printing lower highs and support, volume patterns, you know about this, right? So now we will understand the supply and demand zones in relation to their the retracement zones, volume profile, speed and momentum oscillator. These are okay. Fibonacci, okay. Fibonacci 50% to 61.8% retracement zone. Let me explain you this. Okay, Fibonacci is a retracement tool. For example, Fibonacci, like you have an uptrend. Okay, you have an uptrend. You go up. You have an uptrend, right?
Okay.
Now, how do you know where the price will come? Where the price will come here, come here, come here, or come here, and then go up again? Which point do you know? How do you know? How do you determine this point? For example, let's suppose here, let me show you an example here. The price is coming up here. How do you know the price will come to this point or this point and then will go down? The price is coming up and come to this point and go down. How do you know this area? How do you determine? We call it as Fibonacci retracement. If you go to this tool here, you will see here trend-based Fibonacci here. Fibonacci retracement here, Fib retracement. Okay, you click it. Okay, all right. Now just right. Now go to settings. Over the settings, what you will do, you will only enable 0, 61.8, 1, and 50. That's it. Only these features. Rest you will all disable. Got it?
Okay.
Only 0, 0.618, 1, and 0.5. That's it. Rest you will all disable. This one disable, this one disable. Only these 4 you have to remember. Okay. And then you will use levels. Okay. Levels here and percentage, not values, percentage. Got it? And then you click on OK. Now this your Fibonacci is ready. Okay. Now Fibonacci tells you the position to buy in a trend. Got it? Which, like how far the price will be traced. For example, if you draw the last, this is the last swing low, right? This is downtrend, right? This is downtrend. This is swing low, swing high, this is swing low. So you draw from swing low to swing high, and you will see as the price comes between 60 to 50, this zone here, between this zone, the price reverses, and then price resumes the trend. Can you see?
Yeah.
Can you see? You see between 61.8 to 50 from here to here. So this is known as Fib golden zone of Fibonacci golden zone, Fib golden zone. Okay. At Fib golden zone, the price comes and retraces. Got it? And resumes the direction. Now, if you draw from here to here, you will see, but not every time the price will come back here. For example, at this point, the price did not come and reach here. But what happened here? When the price did not come here and reach here, your next target would be to evaluate the moving average. Now you evaluate the moving average, and if you draw this line here, what happened? What do you notice here? Spring, oh sorry, upthrust. Am I right?
Yeah.
So basically there are 3 points. Number one, I told you, when you are trading with trend, there are 3 points to consider where the price will retrace or pull back, where the price will pull back. This is the first. Okay, number one, I told you, moving average. Okay, number two, trend lines. Number three, support resistance line. Right? These are the reference points.
Yeah.
We call these reference. Number four, Fibonacci golden zone. Got it?
Yeah.
These are the points where the price will pull back. Okay. So anything can happen. For example, here. Now this zone here to here, which zone is this one? Now this is the last high from here to here. Okay. Now what happened? The price did not pull back here. The price did not pull back to the trend line, moving average. The price did not pull back to this one. So will you take this trade? No. Got it? You will not take this
Yep.
trade.
Got it.
Got it? It does not make any sense to just go short over here because we do not have any reference zone here. So we need to wait. We need to miss out on this. But now, what do we see here? Spring, test of spring, and then the price finally go back to the highs. Got it? Right? And now,
Okay.
as we go up from this point to this point, what happened? I know that this is another last high. Now, does it make sense as we pull back to this point? The price exactly came here. Now, there are two things to consider. Number one, you see, the price comes back and retraces on the moving average. Am I right? It hits on the moving average, right? And this is what? No demand, right?
Yeah.
Number two, it also hits on what? Fibonacci golden zone, right? It comes back and returns to the golden zone as well, 50 to 61.8, right?
Yep.
Yeah. And then what happened? The third one, what was the third context here? If you draw a minor support line right over here, this is what? Up thrust, am I right?
Yes.
So we have all three confluence. We call this area as area of confluence, where you have multiple factors to go long and short. Area of confluence. I think I told you before, right? Again here, you see. Now, if you see this moving average, here the price came back. We could not see any no demand, no supply. Can you see over here? No, because equal length, right? There's nothing over here, nothing special about this. So this moving average, there's nothing special. But if you draw Fibonacci zone from here to here, you will see exactly what's going on here. The price just pulls back, rejects this, and close below on a very high volume. Got it?
Yeah.
This is and this could be an entry here. But again, you need to see the relationship between what to say, this one here and here. Do you think you should take this trade less than 1.5? I will not take this trade, right? That's my choice.
Yeah. Correct.
That's the second thing. First thing, you need to say which target would I, what are the areas where would I enter the trade or not, right? The second thing is I will see whether the risk and reward ratio is in my favor or not. If it's not favorable, I will not take the trade. Got it? Yeah. Now you see here, Fibonacci zone. Okay. Now, what happened? If I draw from here to here and I draw the market, this would be the area where I'm expecting AR. Got it, right? If this is selling climax, this is the area where I would expect AR. Right? Okay. Now, this is a reversal. Got it? As I told you, the Fibonacci 61.8 to 50% only works in trend. What? Only works in trend. Now, what do we notice here? This is what? Selling climax. Once you observe the selling climax, you know that the market will reverse. So this Fibonacci trend, this Fibonacci will not work anymore. Got it?
Okay.
Yeah. So we will not draw any kind of this Fibonacci. Right. Second thing, when you're trading with trend, for example, okay, you're trading with trend here, right over here. Okay. First point, second point, and as we make a higher low here, you can draw another line, right? Okay. This is selling climax, automatic reaction. Now you see, this is what? Secondary test. Now we are waiting for the spring. Sorry, secondary test. Now we are waiting for the price to come back and test this region and make a spring. But what happened? Did we see any test? No. But what happened? What do we see? Sign of strength. Jump across the creek directly. Did we see jump across the creek directly?
Yeah.
Yeah. So what will you say, right? We saw the jump over creek. So what I'm saying, every time the spring will not appear. Okay. It's not necessary for the spring to appear every time. Got it? So you can have a different symmetrics every time. But the point is, you need to know that jump, when you see the jump across a creek, this or spring, this is a point where the market is changing. The jump across the creek is a point where the market will change and you will go long. Got it? Now we see a jump across the creek. What do we see here? We pull back here, right? We make a little test here. Do we have any kind of signal over here, over this point, where we can go long? This one? No. This one? No. This one? No. This one? No. This one? Where would we go long?
Check with Fibonacci.
Sorry? Yeah, of
Is it
course.
possible to check with Fibonacci?
No, the Fibonacci is not, we are not in uptrend yet, right? We are just transitioning from downtrend to uptrend. So we cannot use Fibonacci over here. If you use a Fibonacci, for example, if you want to use a Fibonacci, right, you can draw. So we expecting this one market to come here and test this region. This is spring, right? This spring region. But the price did not come back. How about this one? This one? The price keeps on making higher. You don't have, do you have any anti-signal? Do you have any anti-signal over here? Do we have no demand or effort versus no result over here? Do we have? No, right? So we cannot take any trade over here. Now we see another what? What do we see here? Another jump across the creek, right? And now what do we see here? This one here, key reversal. Can you see key reversal over here?
Yeah.
Or this one here, effort versus no result, you see? So either you can enter right over here or you can enter right over here. Got it? Now it's clear. Got it? So this is the point where I was expecting the market to come, but market did not come at this point. So I will just put my alerts. So I will go here. I will put my alert right over here. First alert I will put here. I will go right click my chart. You will see add alert. I'll put my first alert over here. Got it? Okay.
Okay.
Then my second alert would be put over here at this point when we have multiple trades. The third alert would be put over here. Got it? So I will create multiple, whatever triggers, I will go for that one and see the condition. Why this alert triggered and should I go long or not? Did you see? So symmetrics can change again and again. Now, how about this one here? Now let's see. Okay. Now let's see here. Now let's say if you say that this is selling climax. That's it. It's a selling climax. Okay. And this is what? Automatic reaction, right? This one is what?
Yeah.
Secondary test. Right? Let's suppose secondary test. And after secondary test, if this secondary test was to succeed, I would expecting the price to go where? To go where?
Yeah.
To the upside. But what happened? The price just came here, revolved here, and came down. And price, instead of making its position to the high, what I observed, lower high. Right?
Yeah. Right.
So if this was succeed, I would either exceed higher low, and I would say the price would go up, right? And this would, I would expecting the price to go up and test its region and then come back down. But the price instead did not test and failed here. And what do I see here? Huge volume over this point, right? No demand, right? You see here, this one, effort versus no result. This one, no demand. What does it signal you? They signal you that accumulation failed. As I told you, when accumulation fails, what happens? It turns into redistribution. Got it?
Okay.
Because it could be redistribution only if now I would actually, what happened, I would just, this is second test and spring, I would take my trade over here and would expect the price to go up here, right? So I will take this trade actually. But what happened? My stop loss was hit and the price did not go as expected. Now when my stop loss is hit, I will think, why was my stop loss is hit? Why the price did not go in favor? Because this trade did not work out. So what's happening? So rather than thinking I was thinking it was accumulation, I would now think it's a redistribution process. Got it?
Okay.
Yeah. So what will happen? Redistribution started over this lower high. I will draw the straight line over here. And now easily, what happened? You see, as the price came back to this lower high, it makes an upthrust here. The price crashed. Did you see? So
Yeah.
the accumulation actually turned into distribution, redistribution. Got it? Now, so I lose my trade here. Let's suppose I lose my trade here. Right? I lose my trade here. This is the point where I would. So I lose 1 hour. How much? Minus 1 hour. And how much I made on this point? 3.8 hour. Plus. Got it? So what is my total one?
2.84.
2.8 hour. Got it? So it's enough for a day to make, it's totally enough. So at least I'm targeting 2 hours per day, right? So I still made 2.8 hours, 2.884 hours. So this is enough for me, right? Got it? So
Okay.
even the failed accumulation will give you these kind of things. Right? Now we call it now this accumulation change, right? Because when this was to succeed, I would say that the price would go over here, right? Hit over here. And then spring, test of spring, breakout, and then the price would go to the upside. But what happened? The accumulation failed. The same thing can happen with the Bitcoin as well, as I showed you in the example. Okay, accumulation, what we are expecting as a distribution or accumulation can actually fail. Because now at this point, when we lose our trade, we know that this was actually not an accumulation. That's why, right? Because we made a lower high. Do you understand my point? When does the accumulation fail?
Yeah.
Yeah. And now, once we come back, for example, we lost our trade right over here, and we make a spring right over here. Or what this? We make another structure. This is what F versus nodal, small bar. We are testing this region, right? And we had a small bar, small spread bar, huge volume, the effort versus nodal, right? So if I want to take my trade here, I can take another trade. Now I know where should I exit. I should exit my trade right over here, right?
Yep.
So I would exit here. I will put in forth, I will let the trade run and exit over here. And as I go up, what do I see? The price cannot close above it and price close below. This gives me an indication, and this was a lower high. Okay, this is lower high. After this lower high, what do we see? Upthrust here. So during accumulation, I saw upthrust within an accumulation, right? So this accumulation turned into a distribution. Got it?
Okay.
Yeah. So this similarly here as well. You may expect it as a distribution here, like this one here. Huge volume here. But again, as I told you, there are many factors in play, right? When this distribution was failed, we have to draw the structure. Okay, we draw the structure here, from here to here. And we see whether it was oversold or not. Yes, it was oversold. Do you see? It was oversold. And after oversold, this is automatic reaction. Secondary test. But what happened? After secondary test, we made a lower high. Can you see? We made a lower high. If this secondary test was to succeed, it would make the price to drive up this point, right? To the AR. Am I right?
Yeah.
But the price did not go to this point. The price did not go to this point. Instead, the price failed over here, went back. Okay, so now we have a reference level over here. This is a point where if the price comes back to this level, I will short the market here because the price made a lower high. So this accumulation has failed. Got it? And we can draw another channel here, right? If we draw this channel here, this spring, if it is spring here, we can take a long position here and exit over here. Got it? Okay, so Do you understand Fibonacci, this one, right? How to take
Yep.
Fibonacci within a trend here. So you can draw multiple Fibonacci. For example, if I'm here, I'm going to draw this one here. I take this point, I know, okay, this is Fibonacci where I can take my trade. Okay, Fibonacci retracement here, and I can draw my structure now. Draw a trend line here, first one. Okay, all right, I can draw this point here. Now, what do I see here? This is selling climax, let's suppose, secondary test. What do I see? Higher low, right? Secondary test, higher low. So I will say, okay, the price will go up, right? Higher low, higher low. But what happened? The price came back here, failed. The price again came back here, did not reach the high. Did it reach the high? The highest point? No. So we did not make any higher low, right? And secondly, if you draw the structure, if you draw the structure from here to here, we are clearly not in overbought. Are we? Oversold. Are we?
No.
Not. And do you see any shortening of thrust? We did not see any shortening of thrust. Got it?
Yeah. Okay.
No shortening of thrust, no oversold. So you know, even if it's a very high volume is closing on the mark, because of the structure, this will not work, because we need a clear oversold of the structure. We did not notice any kind of oversold over here. Oversold test and then selling climax, we draw the symmetric. Now at this point, once we draw the structure and we draw this Fibonacci retracement and we measure and wait for this area, what do you notice here on this Fibonacci? The price come back here. Okay, this was actually a redistribution process. Got it?
Okay.
Right. So this is selling climax. Yes, this is selling climax. That's true. Okay, but this selling climax is not actually a selling climax. We call it as PSC, which is potential selling climax. We are not sure. Okay, potential selling climax, and then this is potential AR, PAR. Got it? Got it? And now, as we see, now you see PAR here. What do we see here? A huge volume here, a very, very huge volume. Okay, so we can also call it as, because AR will not have a huge volume, right? A very, very huge volume. So we can also say it as buying climax, right? We have a buying climax here. Now we have selling climax here. Now you see, this is how the redistribution process works. We have a selling climax here, buying climax here. Secondary test, right? Now this is AR of this one. Automatic reaction of buying climax. Okay. Automatic rally, right? And this could not be AR because it's on very, very high volume. There's automatic reaction here. And after automatic reaction, what happened? Can you see here? The price did not reach, made a high, and then the price retraced back to the Fibonacci zone. Secondary test. After secondary test, what do you notice here? Up thrust. Got it?
Okay.
Now I will explain you how I did like this. For example, you see a selling climax here. If it was a buying, it was an automatic reaction. You will see increased volume, but you will not see this much extraordinary volume like this. Okay, and the price reverses. So this is selling climax and buying climax. Now we are waiting for the automatic reaction. Where will be the automatic reaction? So this is not automatic reaction. Really, this is actually buying climax. Now price came here. Okay, we have increasing volume now, and the price after that the price makes support. This is what? This is automatic reaction. Now we know that this selling climax we can delete it. Got it? Now we are going with the buying climax mode. After automatic reaction, what do we notice here? Secondary test, and then lower high. Can you see? Lower high and secondary test over here, right?
Yeah.
And then after that, we are coming on the Fibonacci 61.8 to 50 zone. Right, and then what do we notice? If you draw a minor one here, a minor line here, what do we notice? Up thrust. So we know that at least if we go short here, if I go short here, what I will do, I will take my trade like this. I will at least exit my trade at this point. Got it? Yeah, hold on. Hello.
Yeah.
Yeah. So do you notice? So do you understand that? First of all, this when you are marking the like the symmetrics, you have to take care when if it's a selling climax, right? It should be oversold as well. If it's not oversold and it's not selling, got it?
Okay.
Right, it's first thing. And then once we see a huge volume here, so this is actually a buying plan, a mini buying plan. Automatic reaction, secondary test, lower high, up thrust, and it went down. Got it? Now here as well, if you draw a channel over here, how would you draw the channel? From here to here. So this one over here, do you think this one is selling climax? No. Why? Because it's not overbought, oversold, right?
Yeah.
So what happens? You will just draw a straight line over here, right? And as the price goes up here, we see a huge volume here, okay, huge increase in volume. We will call this as a mini buying plan. This is what I want to explain you, okay? We call it as mini buying plan, right? This is what mini buying climax automatic reaction, okay? Coming to the same point. And then this is what secondary test. And notice one thing on the mini buying plan. What happened on this line? The line which I draw for money buying plan. This is what effort versus no result on this line. Am I right?
Yeah.
This gave us a clear clue that we should go short. It was only at this point once we know that it is actually as oversold. Now we will say that this is oversold and selling trap. Got it? Here at this point it was not oversold. Here at this point it was not oversold. Here only here we will say it's oversold. Because it's oversold, you can see you draw a channel, you can oversold, and the price comes back to the trading range. But as I told you, after the automatic reaction, if we go long, right? Okay, we go long, our trade would be failed, right? And we made a lower high. Am I right? If this trade was to succeed, it would at least come to this point. But the price here did not come to this point and failed over here and went back and hit a stop loss. So now we know that we are actually this climax will fail. This accumulation process will fail. And now we can draw another line over here and we can observe up close over as I told you. Got it?
Okay.
Now here as well. Okay, you can. Okay. Now here as well, you can see you can take many smaller trades. Now you see as we go up here, right? We know this is a point. Now as we go up here, right? As we go up, we can draw a small missing line, and we can draw here this point, right? What do we see here? No demand. Can you see? No demand here, this point.
Okay.
So I can take a very small trade over here. Exit over last low. This is last low. I can exit over. So how much I made? 3R. Got it? And from here as well, I can draw another line. And what do I notice here? The price came back here. What do we notice here? This one. Notice. As we go down, what do we notice here first? No demand. Sorry, no supply. Okay. And then after no supply, what do we notice here? Effort versus no result. Did you notice?
Yes.
This is a point where I can go long here again. Okay, and we are in an uptrend. Okay, And if I draw a Fibonacci, for example, if I draw a Fibonacci from the last low to here, we can easily know where the price from the low. This last low. Where was the last low here? This is first, the second, and that's third, fourth. So if I draw here, okay. Now clearly see this here. You see? Now this point here, we came down this point and then we reverse here. You see potential. So we are actually coming on this area as well. Did you see? So the last resistance line plus Fibonacci. Now you can say, okay, the price is just going below the Fibonacci. Yes, it's going below the Fibonacci. It's breaking out. But why it's breaking out on this? You see, F is no result on the breakout of this Fibonacci. So it means it will fail and it will go reverse. Got it? It will go to the top side. Got it?
All right.
So you see how this Fibonacci can work out. Okay. So you can take multiple trades. Now, as we go up here, what do we notice? A huge volume, right? A breakout. And then the price failed below. Now we can draw another resistance line over here. Can we draw like this? Can we draw? On the top of it? Right or wrong? Yeah, we
Alright,
can, right? Yeah, we can. And what do we notice here? When we test this region here, we do not test here, we go up, and now what do we notice here? On the breakout of this? No demand. Am I right?
Yeah.
And if we go short here with no demand, where would I exit? I would actually exit over the last low which was formed over here. Can you see?
Yeah.
Yeah, because this was the last low which was formed, right? So I will exit right over here. And now as you go down here again, now and I know that this is an accumulation process, right? Because jump across the creek, test of spring, so the accumulation. So we are taking short trade as well, but I know overall our trend is up. Overall, our trend is up. Our overall bias is bullish, right? When our overall bias is bullish and we observe this line as we test this region, what as the price hits this region, what happens? See this bar, same spread, but what happens to the volume?
Easy.
Effort versus no result. Am I right? Right?
Yeah.
Effort versus no result. Effort versus no result, we go long here. And now if I go long here, I place my stop right over here. Where would be my target? My target would be the last, this one, which I draw, right? This last high. This last. Now you will say, this is the last high. Now tell me, this is the last high or this is the last high? Which one is the last high? Now, if I draw this last high, okay, you have to notice this last high was followed by this high. So we can say this is the last high, this one is the last high, and this one is the upthrust of the last high. Got it? Last high, and this is UT. Can you do like this? So remember that once you notice the situation like this, for example, you notice a situation like this, right? Like this, okay? Goes up, go here. So you will take this, the first high as the last high, and this one as the UT. Got it?
Okay, got it.
Right? So now, if I want to exit, I will exit on this last high, not on UT. Got it? Now, as I told you here, we extend here. Now, as I told you, this one here, anomaly. I told you about anomaly in bullish, right? Okay, this high volume, huge bar, spread is increasing, but what happened to volume? The volume is decreasing. So it means there is anomaly between volume and the bar spread. Am I right? So what we'll anticipate? We will anticipate the price will go down. Okay. Now, as we go up, now we are already up here, right? We are already up here. Our first target was this one, right? Now we see, did you see this point here? Can you see this point here? Huge volume, effort was no result. The key reversal over here. Can you see? This one? Key reversal. This one, you see key reversal and on a very huge volume. So this is the point if we draw a minor support here. Okay, and if we take a short trade right over here, we can exit right over here on this last one. And we make how much? 3.95 R. Are things making sense or not?
Yes.
Right? Yeah. And now many people will just ignore this. Many people will, whenever you see high volume on chart, you have to see what's happening, why there's high volume. So when I notice there's high volume, I will go and see the situation. Oh, this is key reversal, and I can draw my line over it. Got it?
Okay.
Now let's suppose as I go up here, when do I notice the unusual high volume? Here. But here it does not make any kind of sense here because it's the middle, right? So I will ignore this one, high volume. And then as I go up here, when did I see another high volume? Normally, suddenly, this one. Am I right? This one, sudden high volume, right?
Yeah.
So if you draw this line here, but the point is, this sudden high volume does not come on any kind of this one, right? On any kind of support, last support like this. Does it come, right? No. This was the last one. We extend it. And now there is no reference point. And now what do we see here? Up thrust on a very high volume, increased volume, up thrust. Okay. Up thrust, right?
Yeah.
So I'll pull my trade here. I can go short here. Okay. But the point is, if I just go on this point and exit over here, my risk reward ratio is so less, I will ignore this trade. Okay. And now I draw a mini one channel here. You see, we keep on doing support and resistance here. We draw a channel here, right? Because this is what we see, huge volume starting from here. So we can draw our resistance line from here. Am I right? Why I did not take this trade? Because the time was like the reward to risk ratio was too short. But now, because now the last tick volume was here, right? This one here. You see tick volume? A huge volume here, right? Sudden huge volume. Now, if I monitor the situation, I can see that it is last low and this 2-bar reversal. Can you see 2-bar reversal? So I can make a line of resistance from here. Now you notice here, where do we go for the long trade? Here, this one here. Do you notice?
Yep.
Effort versus no result. Here, no demand. So you can either go long here or you can go long here. It's up to you. You see, no demand. So these are both ideal positions. If you miss this point, you can go long here. And even if you miss this point, you have a third point here. No supply. See, how many times did we get an opportunity? We got opportunity over here, we got opportunity over here, we got opportunity over here. 3 opportunities. Okay. So even if you go long here, the last high was here. This was the last high on this one. So we made 3R. Got it?
Okay, got it.
You understand? This is how we trade the white off. We just go in, we see the situation, and we draw the structure, and then we just go in. Got it? So we will continue in the evening now, 8 p.m. Right? If you're available?
Yeah, can no problem.
Okay. Then because you have some work to do at 12:30, so let's finish it. 3:30. Okay. Bye.
Bye.
Okay.